Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, April 15th. We're halfway through April. Wow. We got a bunch of economic news released to go over today. So we'll start off with the Empire State Index. This is the manufacturing in the New York region for this month. So last month we had 6.9. And then, which anything above zero, of course, is expansion. Anything below is contraction. So as you can see, we had contraction. So it was actually supposed to go up slightly or stick in the same range, and actually contracted in the month of April. So obviously not good manufacturing numbers today. Industrial production, same thing. We had a 0.1% increase back in February, and the forecast is supposed to pull back, and it'll pull back even further in March. And then our capacity utilization, again, not as good. So we've decreased from 79% in February, even past a little bit the expectation of 78.5 down to 78.4. And then, but on the good side, we did get home builders index jumped up from 53 last month to 56 this month. So good news on that side. So that home builders index is basically a confidence level for home building. So that way, if you're feeling a little bit more confident, more likely they're going to start building more houses. Later today, we could have a little bit more volatility to depend upon what's in the Fed beige book, but that comes out by 11 o'clock Pacific Standard Time, and depending again what's in there, it could, if anything surprises the markets, we could have a quick change in there. Currently, stock market's up. They're kind of disregarding the manufacturing numbers, industrial numbers we got so far this morning. They're kind of looking more at the better than expected corporate earnings. People out there from like Intel and Delta. So they're kind of weighing that a little bit more heavily, even though we had not the greatest numbers there, but we had some better than expected earnings. There's also some comments made by Fed member Bullard, basically saying that he's a very hawkish Fed member, and he's very much in tune to raising interest rates this year. Now, he was a little deliberately elusive when it comes to as to when he feels they should be risen, but he does think that they need to get ahead of the curve before any bubble or anything else develops. So he's all in favor of raising interest rates sooner than later. Also, other news: we had the Chinese GDP drop a little bit, so showing some slow contraction in the Chinese economy. There's also comments made by Draghi. He gave his little speech today in Europe, basically saying that everything's going. Their equivalent of QE or bond purchases are going smoothly. He kept the rates unchanged, so that basically is going kind of smooth. Bond market, we're up from where we left off yesterday. But we're kind of in the same range where we started the day yesterday morning. So if you remember, we started with about 102.20 when we did this yesterday morning. It did drop down to about 102.15, and it rose up this morning at 102.20. So we're kind of about the same where we left off yesterday in terms for pricing for interest rates. All right, folks, you guys have a wonderful day. Thanks so much for watching, and we'll look forward to seeing you guys tomorrow. Take care.